Well, welcome back to the Beat the Odds at Building Wealth podcast, Trevor. We are at episode 10.
Yeah, that's a milestone for us. When we first started this project, I didn't know if we would get that far.
Yeah.
Consecutively doing weekly podcasts. So it's been fun.
It was the travel schedule. Could we do it when we're traveling? We stuck to it. So yeah,
that's right. So I mean, if we can make this content, then anybody can make this content. I mean, of course, not everybody has all this stuff here, but you can do it with a phone.
You gotta make some content. Our business owners out there, I keep telling everyone, it's like there's the business world is going to turn into the people who make content and the people who don't make content. And that's kind of unfortunate, but that's just the way it is. When I became a CPA, I didn't think for a million years that I have an Instagram channel and a YouTube channel. That's not what I thought, right?
Nobody thinks that, and it's not comfortable, right?
Yeah,
and because you're exposed, and you get the haters, and you get the people who are the armchair quarterbacks and critics. Yeah. But at the same time, there's the fans. Like, we do it for the people who actually want to learn something about business and wealth, about mortgages, about money, about taxation, and all of these things. So that's really kind of the point of this podcast, is to help Canadian business owners, or the average Canadian, to be able to invest and get to that magic number, like 1.2 million in net worth, so that they can, just get along better in Canada here.
So let's jump into it. Let's jump into one of our favorite charts.
Okay, let's take
Every year we put this chart up there, right? And so this is the chart of what the average Canadian household looks like, and it's shocking. They have 43% of their income is being spent in tax.
Yeah.
It's more than shelter, food, clothing, the basic necessities of life combined. 43% in tax.
Man. And like every year, I actually saw your meme from last year on Twitter again, by somebody else. So I mean, this one is a big one. This one hits people right in that nerve. It's like, oh my God, I can't believe that I'm working so hard just to give it to the government, right?
Yeah, and the first step is denial too. The easiest thing is just to reject the chart, and this guy doesn't know what he's doing, right? Like, that's the easiest thing. It's like, oh, if you're there, I get you. Don't worry, a couple of years you'll figure out how this works, right? And I'll save the tax breakdown, because our next slide we actually just have the tax breakdown, right? Because income tax is not the only tax that you pay, and people will look at this and say, well, the average Canadian is not in a 43% tax bracket. It's like, if only I could go back to the time in my life where I thought income taxes were the only taxes paid, right? That's not how this whole thing works, right? But the shelter surprises people, right? People see shelter 21.8%, and they start to think, well, I have a house, and it's, I qualified on 39% of my income for my mortgage payment, and then I got my property tax on top of it, right?
Yeah.
It's like, this is the average Canadian. And so what you should know about averages is the people at the top dramatically skew it, okay? First of all, a lot of your housing expenses are, what you think is housing is actually tax in disguise, okay? Your property tax is not shelter. It is tax. The GST paid on when that property was constructed and amortized over time, that is a tax. That's not shelter, okay? So like, people have to understand that there is a lot of taxes disguised as shelter.
Oh yeah, I mean, we've got a lot of taxes that we pay that it's automatic. We know that we're going to be paying them, but we don't actually calculate them into this chart that we've got here. Yeah. And I think that's a big mistake. But how do we fix this? Yeah. Is there a way to fix this? Like, how do we make it better?
No. No. No, that's what I tell people. It's like, it's just, no, it's you have to learn how the game's played. Don't wait for it to change, and we'll get into why you shouldn't wait for the game to change, because the analysis is a little bit humbling when you really see like why you should not wait for the game to change, why you should learn how to play the existing game.
But, yeah. When you shared this chart with me the other day, I was just wow, gobsmacked. But, people, stay tuned. This is going to be fun. You're going to really enjoy it or really hate it, and maybe take up a drinking problem. I'm not sure, but
yeah. So the first one, people are like, well, people pay more than 22% tax. I was like, really? I don't think you understand. It's hard for the regular working class Canadian to grasp that the average Canadian does actually not pay. They're not paying 40 or 50% in shelter. Like, they're not. Once you tease out the tax and understand the difference, it's like, okay, that's not shelter, that's tax. But then they also dramatically underestimate how rich the rich people are and how much they skew the data. 35% of the homes in Canada don't have a mortgage on them. Let me just say it again. 35% of the homes in Canada do not have a mortgage on them. Their mortgage payment is zero, right? And then there are a number of other wealthy Canadians where they have a mortgage payment on it, but they're using that as mortgage to invest, okay?
There you go.
And not everybody buys a house that's, dramatically, at the top end of their income, right? I've been, lucky enough, worked hard enough. It's like, I still live in an average Canadian house. Mm-hmm. I could afford a bigger house, right? But I don't want to stress about it, right? There's other things I want to do with my money, okay? I don't want to have all my money tied up in some big McMansion. Like that's not financial freedom to me, right? So I have no intention of living that close to the red line, and I just don't think it's a good choice for most families. But so people don't understand. It's like there's a significant portion of Canadians. It's bigger than they think, mm-hmm. that their housing cost is dramatically lower than 22%. It's dramatically lower than 22%. So once we kind of wrap our heads around that, it's like, but it does identify it's that person starting out where their housing cost is truly 40% of their income. It's like this truck gets even harder because where does it come from?
Yeah, it's got to come from those other things,
So I feel you, but you have to understand it's like this is the average, and that's how the number works out. Okay, so it's kind of funny, especially if you consider 66% of it is lost in tax. Like, remember, I think that 66% is just going around. It's like the misunderstanding of how capital gains are taxed now. That there's a 66% inclusion rate on capital gains over $250 outside of a corporation, and 66% from $1 inside a corporation. But like that's a misunderstanding. So, but the devil's in the details here.
Yeah,
that's why this is a long form podcast, because some people want to know, what do I do about it? It's like, well, newsflash is like, we're not going to work it out in the comments section in Instagram. It's like, you're going to probably want to attend the boot camp. It's 8 hours long, and I'll give you a good overview, and you'll have a good overview of what's happening.
Yeah, get a good idea of how money works, and especially in Canada from a Canadian perspective, because we see a lot of stuff from the United States, and it's relevant for there, but not always is relevant here because of tax implications and our investment strategies and things that actually work here.
This is your Canadian podcast. This is don't try to put the square peg in the round hole. Okay. Yeah. Okay. And you get someone says it's modern day slavery. And then someone else tries to make them feel guilty because they said the word slavery, and so my victim group is better is more victimized than your victim group. It's like, that's why people don't know how to play the tax game, because they're too busy arguing about whose victim group.
Yeah, I was thinking about the meme this morning. It's like we're free range slaves on a tax farm.
One of my favorite ones, I put it on the story the other day. It's like it's the soldier, and he's in camo.
Okay.
And he's got the gun and the scope and the goggles, and there's some poor kid next to him, dirt on his face, scared, right? And he's got a little bit of bruise, marked up, right? And the soldier's saying, it was like, don't worry, kid. We'll have a central bank for you very soon. It's like, well, if anything could just summarize the entire scheme on one meme, is like, that's it. It's like, that's how deep it goes, right? But we live in a tax farm. What does shelter mean? It's not like, shelter does not mean your other utilities, and it does not mean tax, does not mean property tax, does not mean the GST. Remember, when you bought that place, it's like you paid GST on it. Someone did, okay? And this statistical analysis considers that value over time, okay? Okay. I love it's always the source. Show me your source. Okay, like the source is like, why don't I put the source? Because I want people to read information on this and get a confluence of data points to make good decisions. I want to encourage them to do that. And, it's the harsh truth, but anybody who can't find the source is not intelligent enough to have a reasonable conversation on it. Like if they can't enter the headline into Google and find the source, like I cannot have an intelligent conversation with you about it. So like it's kind of the chicken and egg. So, but that is the Rockefeller school system in a nutshell. The Rockefeller school system is, here's the source. It's the only definitive source. Don't ask any questions. Shut up and do what you're told.
That's right.
And that is the system, right? And so it just devolves into an argument where my source is better than yours, and when that's not how you should make decisions. You should make decisions by getting a confluence of data points from multiple sources and thinking critically and then making prudent decisions, right? But that's not what they want to teach you. In school, you have a textbook. That is what happened. Don't ask any questions. Yeah. It's like,
that's right. Asking questions is the ultimate.
The source. It just all has to lead directly to the CBC, and if it was not on the CBC, it didn't exist, right?
That's right. It doesn't happen. I mean, the government would never lie to us.
So those of you asking for the sources, like you've been asking for 5 years, like keep asking. Thanks for the engagement. It's not happening. So if you like, another one. What's the source? It's just like ingrained in people's heads. It's like they have to ask for the source. They could have just looked up the source because, most of the data that we push, it's not that obscure. Like if you spent any reasonable time reading on this, you should have come across this source. So
more than one.
Yeah.
Yeah.
Shelter and food are greater than 50%. Maybe for the working class. Yes, maybe for the working class. But for the average Canadian, that's skewed by the high end. No, it is not. Okay. This gets at, like this comment is like, great. So what are we going to do about it? That's right. Nothing. Every 48 years, we vote for someone different and hoping for a change. And the only change is we pay more taxes and we vote for a different person to put their grimy hands in our pockets on fresh ideas. Anyone else have any bright ideas? Yes, we do. This is why we're here. This is exactly why we're here. I like this guy because he's not trying to claim who's the victim. He knows, he's come to the realization that, we're not voting our way out of this. And he's wondering, how do I play the game better? He's like, how do I play the game better? It's like that. Here's where you got to get to. After denial, and after you kind of get those, the Rockefeller school system indoctrination out of you and say that start arguing about sources, like you got to get, and after you get to the point where you think the political class is there to save you, they're going to ride it on their white horse. Like now you get to this guy, right? Yeah. That's the journey you have to come on. It's like now you're in kind of the headspace on like, okay, great. What do I do about it? It's like you're here, you're at this podcast. I would say for the most people, like come to the boot camp. Like it's 8 hours. Like I need 8 hours on a Saturday to even, start to explain it to you because if it was easy, everyone would do it, right?
Yeah.
It's going to take some work to put yourself in a better system. All the Canadians are going to be tax martyrs for the greater good, to have good health care, pave roads, and learn how the system is rigged against us. Yeah, kind of true. Taxation is theft, right? You hear this for years, right? Like taxation is theft, and like, is it theft? Okay, like without taxes, without reasonable taxes, we don't have. The counter argument to that is without reasonable taxes, we don't have any infrastructure. We don't have roads, court systems, that sort of thing. Right?
The key word is reasonable taxes.
Reasonable.
Like
right?
I don't think 43% is reasonable amount.
And what's my opinion on taxation is theft? And after doing this job for a couple decades, right, and traveling the world and seeing different taxation systems, I was like, I would actually agree that some taxation is theft. Like I would actually, there's different forms of taxation. Some of it is fair taxation, and it's the mechanism of taxation. And really, when I get down to it, it's like personal income tax. I think it's theft. I think I'm on board with that. Like I think, if I had to define like personal income tax, it's like, yeah, it's kind of theft because there's really no way out of that. There's just no way you can sustain a living and not pay it, right?
Yeah.
And there are other countries in the world who don't assess personal income tax, who are in better fiscal position than they have a better fiscal position right now than Canada, and they're not charging personal income tax.
Yeah, they're charging what, a VAT tax or a consumption tax.
There's user fees, and there's sales tax. There's reasonable corporate taxes. Okay, the government is actually involved in for-profit industries that fund the government, and there are examples of that in the world, and so I can kind of get behind that, right? But at the end of the day, we can sit here all day and argue is tax theft, and guess what happens to your net worth? Nothing. Doesn't matter what I think. It's not going to change. So I have to learn how to play this game, right? Okay. I think it's more like 43% alcohol, gas. Anything over 250 is 66%. Okay, anything over 250 is not 66%. Stop listening to the American YouTubers who read a headline and misunderstood capital gains tax. Any gain over 250K, 66% of it is included in your income at your marginal rate. So you're not paying 66% on a capital gains tax. Okay,
it's just the inclusion.
You're paying. The tax system sucks, but it's not 66% on gains. Okay, it's the inclusion rate. Pretty surprised it's not above 55. This is the average, and so trying to ascertain and calculate what is the exact tax for the average, boiling it down to one number, 41 million people in the country. It's hard. There's a degree of subjectivity on this, right? And so, could it be 55 in your situation? Yeah, it could, right? But I mean, the more important part is how do we get it to 25? How do I get to 20, right?
Yeah.
That's kind of what we're here to do. It's government incorporated in BC. They use ICB Insurance Corporation to fund policing. Yeah, okay. Yeah, I mean the communist car insurance in BC. Yeah, I guess it's there. So, but I mean, I generally hate most insurance, and that's you learn to hate it in my job because
it's kind of a scam.
You see all the insurance fees that my clients pay, and I hear all the horror stories. They're very happy to take all your fees, but the minute you want to collect, just wait. You know what I mean? And it's I would say 1 out of every 100 clients that we have, they have some sort of insurance dispute where they've been paying, dutifully paying their insurance, and then when it comes time to collect, when something goes wrong, all of a sudden the insurance company forgets who you are. Who's this guy? Who's this guy? I swear we didn't insure you for that. It's just going to do anything they can to try to get out of paying. So the false assumption with insurance is when it actually comes time to collect, that they're going to pay willingly or in a timely manner. So that's I have those issues. So caution, that's the unspoken risk about insurance. Okay, let's get to the breakdown. Here is the break. How do you get the 43%? Okay. Only 31% of that. So the average Canadian, their total cash income is $109,000. Only 31% of that tax is actually personal tax. On average, okay, that's what they're paying. Okay, the other 21.5%, payroll taxes. This is your CPP. This is your EI. Okay, these are very and everyone forgets it's for every $1 you put into CPP, your employer puts in another $1.
Yeah.
They could have paid that to you, but they didn't have it. Your employer had to pay that, okay? For every $1 you put into EI, your employer's put in $1.40, okay? So you don't see that on your pay stub, okay? You're not going to see that on your pay stub. People just wildly underestimate how much your payroll tax is, right? And it's one of the biggest things that people can come to the realization is how do you get out of that payroll tax system on earned income? Ideally you want to get all the way to the end and you're making money off of assets appreciation,
right?
But that's easier said than done. You usually have to earn your way into those assets, okay? And if you're a T4 employee, you're paying 21.5% in payroll taxes on that income. That's really squeezing people, okay? Whereas if you're self-employed and you're incorporated, you can actually opt out of those, okay?
Yeah.
The CPP with the planning, the CPP, the Canada Pension Plan, or as I like to have, I've permanently renamed it in my head as the Canada Pension Ponzi. It only works, of course, it's underfunded. It only works if more new people enter into the system. And so I'm permanently going to call it the Canada Pension Ponzi.
Yeah, they have
until
to,
they fund themselves.
And they have to enter the system and pay taxes.
Yep.
They can't just come into the system and not pay any taxes, right?
If they are fully funded, I will retract my comment if they somehow get to fully funded status where every dollar they have to pay out, they have in reserves, like, okay, with a reasonable growth rate. But that's not what it is. It's underfunded. They need more people to enter into the system, okay? So if you are self-employed, now, do I think everyone should be self-employed? No. Like, I actually don't think everyone should go out and start a new business. One of the lines that really, I heard someone say once and it made me think is like, well, the last thing the world needs is another small business. That's right. You need to join forces with other people, okay? And so, like, the higher probability of success is go work for a company where you have a chance of ownership. That is a better, higher probability of success. It's like, do we help entrepreneurs from cold start here? It's like, of course we do. But I can't deny the probability of success. Like, the probability of success from a cold start is very low.
Very difficult.
It's very, very difficult, as opposed to buying an existing business or working for someone who has, who plans to cut you into the ownership structure. It's like, that's a much higher probability of success. And now you start having a predictable income, and if structured the right way, if everyone's on the same page in the ownership group, it's like, guess what? You're not paying that 21%. And that's massive. That's just like a massive amount. You're talking 21% dumped into some inefficient CPP program that's, getting you a 4.3% rate of return when inflation is 8.2%. Real inflation. I mean real inflation on the real money. You could have just bought the ounces of gold and got 8.2% over the last 25 years. Like, now you can get out of that and you can deploy that 21% in things that go up in value by more than 8%. Okay, that is life-changing. Even if they never increase their income level, they will this is where people on median income can easily redirect that 20% into efficient assets that go up in value and earn a real rate of return. And guess what? They're multimillionaires. That's it. Like, that's it. Just that one change, right? Mm-hmm. Now, the temptation can be sometimes is, we can save people the payroll taxes that they pay, and now they just go and increase their lifestyle. If you do that, like, maybe the CPP would have been better because at least you got your 4.3%, right?
Yeah.
But if you just go buy a new truck, guess what? That truck's going to zero, has a negative. It's not going to be worth anything, right? You take another vacation, it's like, well, with the savings, that doesn't do it. But if you just take that savings from the payroll taxes and you actually invest it wisely, you're going to the top 20%. You're going to 1.2 million or above. Like, that can realistically happen. Sales tax, yeah. Most of the purchases that we have are going to be subject to sales tax, and there's not much we're going to do to get the average person out of that. Like, you're still going to pay sales tax, okay? So we look at the ones that we can save. It's like, yeah, we can shave some percentage points off the income tax.
Yeah,
likely. We can usually obliterate those payroll taxes, but sales tax, it's like, unless you never want to buy anything and kind of live a lower quality of life, it's like you're probably going to end up paying sales tax. Mm-hmm. You can come to Alberta though, paying 5% is kind of nice. It's like, I talk to clients who come here sometimes, and they lived in other provinces, and I was like, man, I can't get over it. Like, we only pay 5%. I was like, yeah, it's like, it's a real thing, the Alberta advantage, right? So, and then you have property taxes.
Oh yeah, property tax.
Property tax is at 8.2%. Okay. What's really hard to grasp sometimes is people have to understand is that often luxury real estate has a lower rate of property tax than the median income stuff. So
okay, what do you mean by that?
I mean I have a condo here in Edmonton. Okay, I have a condo here in Edmonton. And I have another condo in Vancouver, okay? The condo in Vancouver is worth approximately 5 times the value of the condo in Edmonton. 5, let's call it maybe a 4 or 5, in that range, okay?
Sure.
4 to 5 times the value of the condo in Edmonton. I pay the same property tax on both of them. The exact
crazy.
same property tax on both of them, okay? And people just have, like, different jurisdictions pay different property taxes, okay? For the high price of real estate in Vancouver, the property tax is actually very low. You know, we're talking like less than 0.5% of the value of the property. It's like, why? Because there's a bunch of high-priced real estate in a very small area, and the roads, you know, and the services cost relatively the same.
And don't forget, they have a land transfer tax when you
Yes.
purchase a property. So does that kind of balance that out somewhat?
Yes and no. If I don't know how to invest, right? The conventional investment is like, it's just like you heard, buy low, sell high. Okay, buy low, sell high. That's just like buy low, sell high. It's like, no, you replace buy low, sell high, buy, borrow, die. I'm never selling. I'm never paying it. So do I have to pay the transfer tax when I bought it? Yes. Am I ever going to pay it again?
No.
No. Because when you buy assets, you want to buy assets that you think are going to be good assets for 100 years that I can pass, you know, with tax planning to my kids tax-free. Okay. That is the goal of this thing. So yes, I paid that land transfer tax, but I didn't, you know, I wasn't one of these ones who, you know, they get on the cycle where they think they're going to trade in their property in Vancouver every 2 or 3 years. Like, yeah, you're going to pay the land transfer tax every single time, right? And so you're going to get burned by that. And so, like, you have to shift your thinking. It's like that is not the goal. Like, you're trying to buy assets that you can hold for 100 years. It's not about getting which asset's the best performer for the next year or 2 or even 10. It's which one can get you a good rate of return for 100 years and not pay any tax. Because it's not the rate of return that matters. It's the rate of return after tax. That's what matters here, okay?
Yeah.
And so if one's walking towards a tax bill and the other one's not, it's like I can wait till the value of the property goes up in value and I can borrow against it. That's not a taxable event.
Right. Yeah, because there's no tax on debt.
Okay. And then you have, your various, the profit tax. That one is hard for people to understand. Like, what is a profit tax? But like fairly, it's like you have to assess something that most of the things that we buy you're buying from companies that are for-profit companies that are subject to tax. And if they they don't pay the tax out of the goodness of their heart, they're going to raise the prices, right? And it's like all these, like, the Jagmeet Singhs of the world. It's like, oh, we're gonna tax the grocers. Like, they're just gonna pass it on to the people who buy the stuff in the store. Like,
yeah, and the example I shared with you last week with Google. Okay, so now Trudeau has come out with a new tax on the big tech platforms,
digital services,
the digital services tax And I got a notice from Google. Any small businesses who are going to be advertising on Google's ad platform are going to be a 2.5% tax on top of your current taxes plus GST, so that they can remit that back to the government, so that it'll help them pay for that tax that the government is putting onto them. So these people think, oh, we're going to make so much more money for the government. All it does is it squeezes the small businesses.
Yeah, who's paying that? That's a small business tax. That digital service tax is a small business tax. We're buying ads on Google and Facebook.
That's right.
That's it. That's all it is. It's just a tax on small businesses, right? Okay. And, we're going back to our initial conversation of why you got to make some content, because if you don't make any content, you have to pay the ad fee. Your ad fees are just going up and up. Like, you're never going to get off the ad cycle. But that's a different discussion for a different day. And then you have some various consumption taxes there. And so that's what gets you to 43%. Okay, so there's the breakdown. We know when people see that, the first thing they're going to say is, like, how could it be 43%? Here's the breakdown of why it's 43%. Is it exactly 43% in every? No. Does it matter? Not really. Like, if it was 42 or 44, it's like, okay, you just got to realize it's high. How do I play the game?
Yeah.
Okay. How do I play the game? I have to own assets that go up in value. Okay. I have to enter transactions. There's some transactions where you can enter where you're not going to pay any tax. Okay. And then how do I shift my income that is more tax efficient? Okay. Eligible dividends in Canada. Okay. Have $1 million of stocks paying $50,000 a year in eligible dividends. $0 in tax. In most provinces in Canada, you're pretty much at $0 in tax. Okay. Have assets that go up in value. Have a small business that you're not paying that payroll tax. Like, dramatically going to shift that difference, right? and then we start looking, okay, once we know it's high, it's like on a kind of on a nominal basis, it's like, man, it looks scary.
Man,
This chart, I saw a
terrible.
bunch of people, look at this chart, and it just looks scary, right? And you can just see the growth from 1961, right? And it's kind of interesting to see the growth from from anytime you look at something from the 50s or 60s and then see it explode after 1971.
Yeah.
It's like, if you understand what happened in the financial system on 1971, that is the birth date of our financial systems. Like our entire monetary system on planet Earth was born in 1971, and Richard Nixon, made the announcement, took the U.S. dollar off the gold standard. Like,
yeah.
So
or did it start in 1913 with the introduction of the Fed?
The Fed, yeah.
Fed.
The Fed, is it 1913? Was the conclusion of World War I? Was it Bretton Woods? Like, there's the points. But like, I in my view, I view it as U.S. dollar part 1 and U.S. dollar part 2, and part 2 started 1971. And so when I look at a historical basis going back hundreds of years, it's like, I think the only thing that's somewhat unique, history is never the same, but it often rhymes type of thing. It's like, the only thing that's somewhat unique is there was actually a part 1 U.S. dollar, whether it's 1913, the conclusion of World War I, or Bretton Woods. It's like, people could debate on that, but I think that was distinctly different than post-1971, and all the data points start to show it. It's like,
look at the chart there. You can see what's happening with everything there, right?
Yeah, just go back and like look at money supply. It's like everything on an aggregate basis just starts to explode, okay, in 1971 on a nominal basis. And it just looks like, it's like, man, people are paying over $45K in taxes. It's a lot of money.
That's a lot of money.
That's a lot of money, right?
Man, what I could do with an extra 45 grand.
Are the services that much difference, than they are now? It's like, we're supposed to get more efficient as human beings over time, not less efficient, right?
Yeah, I would probably argue that our services that we're getting for the money we're paying out have dramatically gone down. Have you tried to go to a doctor lately, or go into an emergency room, or get any kind of procedures done? Brutal, man. You're waiting months. You're waiting like so long just to get basic care. And, is it going to be top notch because the doctors are overworked, overburdened, like they're, seeing multiple patients? And is it the top notch? Is it the best that we could possibly spend? I think the Fraser Institute put out a number. The average family is paying somewhere around $8,600-$8,700 a year in Canada for healthcare. That's our portion. Are we getting that much back in services? I don't think so.
I'm kind of lucky with my doctor. I think I got a good family doctor. I really like the guy, because I go in and it's like, and I switched, right? Like my wife's family had gone to see this guy for years, right? And he's over, we moved across town, so like okay, I'm looking for someone a little more convenient. My doctor's never available, working 3 days a week type of thing, right? Go see this guy. This dude's working evenings and Saturdays and Sundays. He's got a whole pile of kids. I don't know how many kids he's got, right? But he's got a whole pile of kids, busy family. Look out in the parking lot. He's driving the G-Wagon. It's like, this is my guy. Like, this is my guy. He's not working 3 hours a week talking about, some, awesome. He's not starting his day with a land acknowledgement every day. And you know what I mean?
Oh, my gosh.
Like, this guy's rolling. I can go see him on a Sunday. It's like, yeah, this is my guy. Like, for
this
sure.
is the guy. Yeah.
So I'm, I don't want to tell you his name because other people will go there then. So that's that's a problem, right, in this country. So
we can have a discussion later about that. Right.
Okay. So here was the chart, and I assembled this to you. I assembled this, and like, I knew it was bad. I didn't know, and honestly, I didn't know how bad it was until I assembled the chart. And I went and got you after this, because a lot of times, we post these things, like they're coming out in advance, and I give them to Ty, and Ty posts them. It's like, but like, I know all of these things are coming, and people are going to go. I know they're going to go through the gambit if I post the chart and they don't understand what the 43% is. Like, that's tomorrow's post. Don't worry, we'll get you on that one. And then the posts are going to be. It's like, I'll just back up on one comment. It's like, thanks the corruption of WEF, the World Economic Forum, Soros puppets, liberals.ca. It's like, okay, so here it is. It's like, this is the step before. Remember, the one guy, he's of the understanding, like, it doesn't matter who gets elected. This guy still thinks that he's going to vote his way out of it.
Yeah.
He still thinks that someone's going to win.
Okay. So everybody who is watching the podcast, paying attention, whether now or later, it's probably a good time to take a seat, take a deep, deep breath, before what we're going to show you on this next slide. All right.
So everyone thinks like you're going to vote your way. If my guy gets elected, oh man, my taxes are going to drop to 20%. Now I don't have to listen to this podcast because don't worry, the white knight's riding in here. Poilievre's coming in here, and this thing's got like I'm dropping to 0. It's going to be Dubai, version 2. It's like, oh boy, do I have bad news for you? It's like, okay, here it is. Here is the average tax rate. And let's forget about, again, it was different in 1961, but what do we say? The financial system changed in 1971.
Right.
Okay. So look at this number, Trevor. 43 in 2023.
Yeah, that's bad.
43.8 in 2022.
That's bad.
Okay. It's all Trudeau's fault, right? Go back to 2014, 42.8. So when people say, like, is this going to get better if the Conservatives win? It's like, yeah, it might go down from 43 to 42. Like, so you might want to learn some strategies here, because if you're just waiting for you're not like, you can get an extra Tim Hortons coffee. Like that's all you're going to get.
Going back to 1970s, look at it, guys. Look at
42, 46, 41, 45, 43. It's like it's been 43% for 50 years.
50 years, folks. 50 years.
50 years, so, it's been 43%.
So as long as I've been on planet Earth, taxes in Canada,
the average Canadian's been paying 43% in tax.
43%.
And some people are arguing online about, it's like, I got news for you. The bankers are in charge, not the people that you elect, right? It's like
that's right. The money printer goes.
Yeah, it's like the bankers are in charge of this thing. It's like, this is the way this thing is going to roll, right? Now, the inflation tax gets better or worse depending on the regime at that time. Like that is, and so we're not even talking about the main tax, which is inflation tax, right?
The hidden tax, the secret tax.
Hidden tax is like, yes, that is the difference where a good regime, they can keep inflation, forget about government, produce manipulated CPI, actual inflation lower. That's the hidden tax. It's stealing from your wages because your wages don't go up as much as the real inflation. Okay, but the tax rates that you're paying for the various taxes, the personal taxes, the corporate taxes, the
licenses and fees,
and the property taxes, the sales taxes, like that thing's staying at 43, people. Like, it's staying at 43. I would be shocked if anyone got that to a number of, say, 39. Shocked, right? Like, you get the right regime in there, maybe that thing's going from 43 to 42 or 41. Like, maybe that's an optimistic view on it, but like, that's going to 43 unless you reorganize your life, unless you understand how to work the system. It's like, you're paying 43% on that area, right? So if you're contemplating out there, it's like, wow, I don't have to work for an employer who's going to cut me into the ownership, because as soon as Poilievre comes in here, I'm going to pay 25%. There's no evidence that that's going to happen. I wish that was the case. I wish I could rewind my life and go back 20 years where, before I realized that, the voters box was, the suggestion box for slaves, right?
It's
like the voters box it overestimates how much power that the political leaders have, and underestimates how much power that the machine has. Okay, and when you trace it all the way back, and you go all the way back, it's like the kind of the Illuminati conspiracy is like, forget it. You don't have to go that far. You don't have to make that quantum leap. It just goes back to the banking system. Okay, just go back. Just look at the commercial banks and what their financial interest is. It's like they want to print money, and there's going to be an inflation tax. Okay, and so this should be one of the most humbling, pieces of information that you have. And like, I guess clothing's gotten cheaper. This is the there's been an effect by, more of this is produced overseas at lower wages, and as human beings are naturally deflationary. Human beings naturally figure out how to do things. If it wasn't for, the fake money that's constantly getting inflated, is like the prices would normally go down. Like that's what would happen, because we learn how to do things, quicker and cheaper. That's how we do. Okay. And then you start looking at shelter. It's like, man, that hasn't changed all that much too. Because
no, it's relatively been steady. 50
can't-
years.
It can't. If the taxes are the same, you can only go bankrupt once. You know what I mean? Like you can't borrow more than your income. It's like there's a certain amount where you can dial it up, right? But that's an important delineation. And it's like, now how much we're paying on the equity of the house has changed, and how much we're paying on interest. And there's a post coming up next week, but I'll save that one for next week. But that's the humbling chart. It's like here's the problem. You've come full cycle from disbelief that it's actually 43% to okay, I understand how 43% is calculated, but don't worry, I'm going to vote my way out of it. No, you're not. You have to strategize your way out of it. That's it, right?
Yeah, there's no easy path to getting a better life in Canada. Yeah. You have to take the long route. You got to take the disciplined route. You have to listen to voices that are teaching you how to get out of this mess, this tax mess, with proven and real strategies.
Yeah.
So,
and are the wealthy in Canada really upset about this? No, because the system is still very advantageous for people who know how to work the system. And the proof is in the pudding. So we look at what's the net outflow of millionaires. Okay, this is across the world. Where are the most millionaires leaving? China. Well, they have a massive population. Okay, China and India, 1, 2 in population. India I think is number 1 now. China's number 2. And you can see they're 2 of the top 3. So most millionaires is like, yeah, maybe I don't want to live in China. I want to go somewhere else. Okay. I don't want to live in India. I want to go somewhere else. Like they're going to be, you would think, a poorer country, large population base. That's, not surprising. Okay.
Yeah. And the UK is
the UK
draining millionaires.
This is wild. Like people need to understand the perspective of this and how much bigger the populations, so you see 15,000 coming out of China, 15,000 millionaires leaving China, and 9,000 millionaires leaving the UK.
That's something.
The UK has an exponential, orders of magnitude smaller population than China. Okay. And that tells you, it's like, okay, the rich people think there was actually a problem there. Okay. Now they're worried about their house in London. Is that actually going to retain its value? Okay. They're worried about what's how is safety, not where I want it to be, or is it like, man, this thing's spiraling out of control, right? And we've heard some of the tax stories from people who've left the UK to come to Canada and they're setting up here, and how much wildly better it is on what the avenues are there. And so like here's the proof. So when you look at this, is Canada that bad? I was like, okay, for the average working class, they're upset, and rightfully so. But like, why are the millionaires not leaving? Because it's actually pretty good if you know how to work the system. And so that's why when we get to the next chart, it's like, where are the millionaires going? Okay. Number 1, they're going to the UAE. I was like, okay, I told you, like I told everyone, it's like, there's a reason why the UAE works, right? And that doesn't change just because they have a 15% headline corporate tax. First of all, it's like most people aren't going to pay it. Just because when you start to drill into the specifics, the devil's in the details. Okay, there are some items that are excluded. There's a minimum threshold before you get into being a taxable corporation in the UAE, and then there's exclusion on certain activities are not included in tax, and there's the fact that if it's paid out personally, there's no personal tax. So, are people is everyone gonna be paying 15%? No, that's not how it's gonna work. I'm not even sure the UA really wanted the 15%. It's just the pressure from the globalists that insists on the 15%, and we're going to cut you off the banking system. So, but it's a porous 15% tax. Okay, but the UA is a very attractive place because it's a very good place to kind of set up shop. Okay, if you're rich, it's really safe, it's really stable. They have. I'm a big proponent of this. I think it's. We're looking at countries, you're going to have countries that have resources and ones that don't. UAE has resources. Canada has resources. Okay, the world's going to need those resources, and so the countries that have resources, they can survive a greater amount of mismanagement. Does the UK have the same resources as Canada? Not even close. It's not even close. Okay, even the U.S. It's like, does the U.S. have the same resources on a per capita basis that Canada has?
No,
not even close. It's there's more oil. I'm going to say this because it's going to like shock someone. It's like when I tell Americans this, it's like, this guy possibly can't be right. It's like, don't believe me, just go look it up, okay? There's more oil in northeastern Alberta, proven oil reserves, than the entirety of the U.S. The entirety of the U.S. There's more proven oil reserves in northeastern Alberta. Forget about the country of Canada, just northeastern Alberta, than the entirety of the U.S. That's how much oil we have, right?
We got lost, man. Like we should be, we could be like the richest country. Oh my gosh, we could be like UAE, really, if we had a favorable regime, right?
It's wild, right? And so there's 67, and it's the percentages here, right? And so you look at this, it's just like the percentages was shocking with China, India, and the UK, because China and India are losing millionaires, but as the number of millionaires compared to the size of that population, it's not as big. Whereas the number of millionaires leaving the UK compared to the size of their population is absolutely mind-boggling. And that's new. If you go back and look at last year's number, it's not like, this is a new development.
Yeah, okay? It's very telling as to what's going on with the UK right now, and just looking at the news cycle and stuff and what's happening there. Be careful what you meme, folks. Be careful what you meme. It could land you in prison.
Yeah, I don't think we can go to the UK now.
No,
they're going to hurt
not
us.
interested.
Okay. So, and then you look at, there's 6,700 millionaires going to the UK or to the UAE, and 3,800 millionaires coming to the US. Okay. The UAE only has a population of 10 million. This is shockingly high when you start looking on a per capita basis, like why people are going there. Okay. Whereas, the US, what is it, 340 million is the population or something like that.
Yeah.
So 3,800 and 340 million as opposed to 6,700 into 10 million. It's just,
that's huge.
It's massive, right? Singapore, 3,500, very safe, very secure. People like the banking system. Okay. Canada, 3,200. And so people have to understand, it's like the average working Canadian is struggling, but the Canadian millionaire who knows how to use the system, pretty darn happy. They are pretty darn happy, and people looking across the world, it's like, they say, like, I want some of that. Like, I want some of that because it works if you have money. And that might be shocking. It's like you might get mad at it, but you only got one thing to do. It's like, I got to get some money. I got to build some wealth. Because this thing's not changing, right? We told you 50 years of history with 3,200. We got 3,200 millionaires coming to Canada with a population of just crossed 41 million now, whereas there's only 3,800 coming to the U.S. on 340 million.
Big difference.
Almost a 10x difference there, right? And marginal difference in the net millionaires. And so, like, the millionaires are not upset about the taxes. Okay, the millionaires are not upset about the taxes because they're not making money through earned income. Okay,
right.
The fallacy is people think that wealthy people are wealthy because they earn more money. Wealthy people are wealthy because they own assets that go up in value. When assets go up in value, that's not a taxable event. Okay?
That's right.
There are a number of things. It's like, forget about the tax rates. Like, what can you do in Canada where you pay zero tax? Zero tax. Have $1 million of Canadian dividend paying stocks giving you $50,000 a year in dividend income? Zero. Okay? And if I show someone how to do it properly, it's like, I'll show you how to get $2 million paying out 100, and I'll lever it up, and so I'll write off the interest, and I'll still get the $100,000 tax free if you know how to write off the interest and lever it up. Okay, so people don't know how to do this. Okay, your principal residence still so far tax free accrual. That could change, right? And if that changes, it's like, it's going to be annoying for the rich people. And it might cause some of them to reconsider, right? But the difference is at the margins. It's still not going to be the dagger, I don't think, right?
Right.
Because if there was a tax on principal residence, it's probably going to have some sort of I think it's coming. Like, I don't think, if someone told me that they're definitely going to sell their $10 million principal residence in 40 years and not pay any taxes, like, I don't like the odds on that trade, right? It's like, it could work, but like, I just don't like the odds, right? I think eventually they'll come looking for the McMansions on your principal residence tax. So I don't know if that's a good long-term strategy, because real estate's really easy to tax, because it's slow. You can't move it, right?
Yeah.
It's very easy to tax. And so, but so far, principal residence, great. Sell small business. You can sell small business shares, $1.25 million in eligible small business shares, and you can sell them tax-free. And every person can hold assets that go up in value. Assets that go up in value. It's like, this is the game. It's like, I have to find the right assets that I can buy and hold assets, right? And so the assets that we pick as, people who are concerned with the after-tax rate of return are different than the person who's just trying to maximize the rate of return before taxes.
Yeah.
Before taxes, right? And I got news for you people. Your RSP is not tax-free, okay? You're getting deduction on the way in, and you're going to pay the taxes on the way out, right?
Yeah, didn't we have a podcast on RSPs are scams?
Yeah.
Didn't we do that?
I'm going to keep hammering it, and people just don't understand. It's like, you can attend the boot camp. It's like, why is your RSP a scam? It's just like, well, I mean, because there's faster ways to grow your money. There's faster ways to grow your money, and, people, it's sold as a fast way to grow your money. It's like, it's not a fast way to grow your money. It's a tax deferral. It's a tool. It's an overused tool. Okay. That's not good. And people think, well, I can name a beneficiary. It's like, you're not, you can name it to your wife. Yeah. And you can pass it to your wife, but then when your wife dies, it's like, you're going to pay tax on that. It's like, what if my wife names a beneficiary? It's like, that person, if they're over 18, they got to pay tax on it when it comes out. Okay. If they're under 18, they got to bring it into income in the years remaining, until they turn 18. So if they're 16, guess what? Between, they don't have to bring it in income in 1 year. They got to bring it in income in 2 years. Like, they're paying tax on it, right?
Yeah.
Your RSP is not an intergenerational wealth transfer strategy. It's like, that thing is going to be brought into income. But other assets, yes. Not even just having them go up, buy, borrow, die. It's like, and people will think, well, now there's a big tax bill coming on debt. It's like, no, you don't know how to use corporations and estate freezes to pass those assets tax efficiently to the next generation. And those are available to people in Canada. Okay. And so there is tax-free or tax-efficient accumulation of wealth that can happen in this country. And the wealth is relatively very secure because we're in a commodity-rich nation.
Yes. Yeah.
And the people who are here are frustrated at the government, rightfully so, because they've driven up the inflation tax. That's the one that's actually higher. The headline taxes, the actual tax, the non-hidden taxes. Even though some would argue that a lot of some of the taxes are hidden, we don't quite see them. But the taxes that are not inflation, it's relatively the same rate that it's been for 50 years. The inflation tax is higher, and that's what making people feel the pinch. But I got news for people. When you have assets, inflation helps you.
Yeah.
It moves
the price
wealth
of your home. Just look at the prices of homes that have been going up for the last several years,
you got
right?
$10 million in stocks and real estate, and the inflation's 10%. Guess what? Like, you're $1 million richer, even if none of those earned you any money. It's like the price probably just appreciated on the inflation. It's like, but you don't need another $1 million to put gas in your car and food on your table. You won that trade, right? And so here's where it just, it makes sense for wealthy people. It's like, why are they not leaving? It's because it's a really safe place to park money. That's why a lot of foreigners want to park money here. It's the risk reward on parking money in Canada. It's pretty good. It's like, just look at what happened in the stock market. Japan blew up on Friday, last Friday, right? They blew up because they have a 0.25% interest rate. That's enough. Moving it from negative 0.1 to 0.1 was okay, but going from 0.1 to 0.25, and Japanese stock market blew up. And then on Monday, the bloodbath continued. And then, of course, what happened in the U.S. market? Bang, down, right?
Yeah.
What happened in the Canadian market? It was asleep. People, they don't they underestimate the value in the Canadian market because they look at the TSX as a whole. I was like, I don't buy the TSX as a whole. I buy the government-protected monopolies.
Yeah, by banks, by energy, by these types of assets.
There's a very particular set of industries and types of companies on the TSX that outsize the TSX returns, right? And so, if you want to learn how to start getting this to work for you in your life, what are the baby steps to getting there? The boot camp's a great place to start because you don't need a change in regime. The government's not going to bail you out, and you don't need a change in regime to change your trajectory for you and your family, right? And that's what we want to help you do. Is how do we help the average Canadian actually build some wealth? You don't have to be a top 1% earner to do it. I mean, certainly helps if you can be, but you don't have to be. Like, we recognize, that's a very hard barrier to get to. Is like, how do you get the average Canadian? We can get the average Canadian to get him to 1.2 million, 100%. We can get them there, right? Getting to 7.3, getting the top 1%, you got to be really disciplined. You need a little bit of luck, or you got to increase your earning power, usually, right? But not being part of the bottom 80%, that's education. That's discipline, and hopefully we can get some more people there.
All right, awesome. Thanks so much for joining us on the podcast. Don't forget, visit spurrell.ca, SPURRELL.ca, and click on the tab for Bootcamp, and we will see you at the Bootcamp. Beat the odds at Money and Wealth in Canada. See you then.
Good.
All right.